Yes. Thanks a lot, Jacques, for joining me again. And,
Pleasure.
continuing this conversation around the balance sheet
Yeah,
and the importance of the balance sheet.
the statements.
Yeah, the statements, which if I remind myself, the statement was the balance sheet, the income statement, and then the cash flow. And you said that there's a new one. We don't call it a financial. You call it finance. What new terminology?
The statement of financial, the changes in equity.
Changes in equity.
Yeah.
100%. So we're going to get onto the cash flow statement. And admittedly, over the years, as a small business, I didn't really find a big use of the cash flow statement, from a small business point of view.
Yes.
Don't get me wrong. We know, and let's just touch on that quickly, for me and maybe for the audience, is how important cash is in a business.
Yeah, cash is basically the reality of what's going on.
Cash is king.
Cash is king, as I say.
That's right. And interesting, I wanted to ask you, with your auditing business and your accounting business, you've seen businesses come and go. And how important is cash, and how influenced the businesses that you see?
Well, cash basically, or cash flow, the availability of cash plays a huge role in the viability and the prosperity of any business.
Yeah.
If you do not have sufficient cash flow reserves or cash coming into your business, you basically can't operate.
And so what I was trying to get to is, obviously you see a lot of businesses and deal with a lot of businesses, and taking from what you said, over the years, have you seen that being the biggest impact on businesses, the cash side of things?
No, I wouldn't say it's the biggest thing, but it's definitely a telling factor when businesses when things are getting tough.
Okay.
COVID is a very good example of how when cash dries up and there's nothing coming in, there's things that still have to go out.
Yeah.
And then that's probably the biggest downfall of all the companies, was the lack of cash flow.
Yeah, I think, and more so in a smaller business.
Yeah.
Definitely. So as you said, cash is king. But I think what's also, where people get confused is that there's a difference between cash and profit. You can have the best profit in the world.
You can, that's
but no cash.
Correct.
I remember coming to you going, well, great, you've given me my financials, or the financials in the business. We're showing a profit, but there's no money in the bank to pay the receiver on that one.
Where's the profit? Show it to me.
Yes, 100%. Yeah. So it's a difficult one to get your head around.
Yeah.
You got a great profit, and this is you doing great. But when you look at the bank balance,
that's where the interpretation of the cash flow statement comes in. Is to show the users of the financials where did the company utilize the cash.
That's right,
for 100%. The year.
Yeah. So just before we delve in a little bit more deeper into the cash flow statement, is that and you speak to a lot of tradesmen and plumbers and whatever it is, and I would say 90% of the time, they run their business out of their bank account.
Correct.
Because that's what it's about. Money in, money out, money in, money out. So it all centers around exactly what we said. Cash, cash, cash. So we can be asset rich. We can have our wonderful houses, our cars and everything. But if there's no cash in the bank to pay whoever it is.
No, it's got to do with the liquidity of what you can turn into cash.
That's right.
It makes you survive.
100%. So just explain a little bit more about you touched on it very briefly, the cash flow statement in respect to the balance sheet. So what I understand in my limited, I wouldn't say limited, but my understanding as a non-financial person, a cash flow statement in terms of a balance sheet, in terms of the financial statements, it actually just gives the reader of that the change in your cash balance. And as a result of your cash balance, because cash is such an important health measurement of a business, it gives an indication of where it stands with regards to its ability to trade.
That's correct.
From a cash perspective,
From
obviously.
a cash perspective, yeah.
So again, I go back to the statement I made earlier. When I started getting into the financial side of things and understanding it, because as a norm, in a small business, you tend to trade out of your bank account. You really knew exactly what was happening day to day. So when it came to the financials, my cash statement wasn't really that for me. I'm saying, well, okay, great. 100%.
No, nobody really gave it 2 cents of thought. Why is this? Or
because I knew.
Is it correct or is it?
Yes.
Is it not?
Yes, but if you look at it from an external person who wants to invest in a business, or as somebody who's going to finance a business, obviously, if they see that the company's got good cash in it, obviously it's...
Or how you utilize the cash that you have in the business.
Yeah.
I think that's also very relevant to an investor or to a bank that wants to borrow money.
Just to delve a little bit deeper into that one, when you say utilizing of cash, from when you're reading the statement.
If you have a look at your balance sheet from year to year, you'll see movement either on your fixed asset side or your current asset side. Your cash flow statement will give you more or less an indication of where did you spend cash.
Okay.
Did you buy fixed assets? Did you buy a new vehicle or new equipment? Did you sell new equipment, or for that matter, did you give somebody a loan?
Okay.
So you did good. You've got a nice big profit in your income statement, but your cash in your bank is low. So why? So I borrowed somebody money. I can see that in the cash flow statement. It'll be reflected there as amounts paid out to loans or loans. Your loan account grows. The same with. Do you have a problem with collecting your funds from your debtors? You'll have a comparison between the last year and the current year debtor balance.
Yeah.
And there will be a line item in your cash flow statement or your note that says, you've gathered more money from your debtors than last year, or you spent more money on your creditors than last year.
Okay.
And the same for your stock values. It'll give you an indication of whether or not you made money out of your stock or you put money into your stock.
Okay. So what I'm learning something new now is, and if I could just interpret it in my own mind, is that if I look at my cash statement, instead of just seeing the change in cash in and out, and the healthiness of my cash balance in respect to my balance sheet or my business, what you're saying to me is that by looking at the cash statement, it actually gives you insight to the business of how prudent they are with their money in terms of their cash.
That's
not
good.
Going to spend it on lavish stuff or whatever it is. It shows that you're moving your cash around, but in a responsible manner for the benefit of the business.
That's correct. Yeah.
Okay.
Because you can have a huge sale at the end of the year that drives up your profit.
Yeah.
But it lies in a debtor that still has to pay the money.
Okay.
You'll instantly see, wow, my debtors have been under-collected, for instance.
Yeah.
Or it's trying to understand where's the money,
Right.
If you ask me, how do I pay the receiver? I'll have to tell you, well, look, you probably have to ask your debtors to pay you.
Okay.
That's where your money's lying.
So again, and I think we can basically wrap this up, because cash is king. We know that, and as one of the three fundamentals, cornerstones of a financial statement. How would you rate? I mean, so we have the three, isn't that? So the balance sheet. I don't know, maybe it's a silly question, because I was going to say which is the most important of those three statements, but they're basically all important.
They're all important.
They can be read independently of each other and together as one. Correct in saying?
Correct.
That? Yeah.
Yeah. Okay. I'd say your balance sheet is probably the more important statement to there's a lot of information that comes out of your balance sheet for the future longevity of of the company to decide whether or not it's liquid and solvent and so on. Your income statement, the bottom line that says profit or loss, there's a lot of things inside the income statement that doesn't necessarily give you 100% profit or loss, out of your activities. There might be revaluations of assets or stuff that's been scrapped and so on, and that might skew a bit, the bottom line. So, but the balance sheet more or less gives you, do I have reserves? Do I have current assets? And so on. And then the cash flow statement is like, well, I'll tell you where you spent your money, so that you can have an idea of what to do or what better to do,
Okay.
Get better terms with your creditors. Keep some cash back. Get better payment conditions out of your debtors,
Yeah. Well, that's a whole conversation on its own.
Yeah. That's all.
Cash flow.
So based on, I'll say you've got your balance sheet, income statement, and I think that's the order.
Yeah.
And you need to look at it to be able to see whether or not it's.
Yeah. Okay. Great. Well, thanks a lot for that.
Thanks.
Well, we appreciate it. The next time when we get together, we're gonna, just wrap up and maybe delve into that wonderful thing called the different ratios.
Ratios on it, the using of the financials.
The use of the financials.
Or interpretation of
Interpretation. Thanks again.
Thank you.
And see you next time.
Thanks.